Hello folks, Taylor Johnson here, giving you a quick look at the September 2024 housing market report for the DC regional area. As you can see here, this is a summary of the whole area. Comparing to last year, September, we had closed sales more or less about the same, but as we will see, that number is actually down. I'll have you look at that with detail later. Median sales price is up around 9% days in the market. New pending sales, this is where we've really seen a surge. We're up at 15.7%, much better than we've been the last several months. New listings are up, and active listings are also up considerably. Months of supply remains about the same, and key is that showings are up. This is really nice for both buyers and sellers. It's not a significant increase in terms of competition for buyers, but it is good because increased showings means we're probably going to get more listings, and that means more inventory and more choices for buyers. So year to date, I think, is a nice number. What keeps happening to my cursor? Here we go. We've got median price, you can see, and new listings year to date are up where they were year to date last year. Year to date active listings again increased over last year at the same time frame. And let's move on. We've got here in the market trends, home sales are picking up as mortgage rates fall. And I can certainly tell you anecdotally that I've noticed a pickup. I have many more people looking at homes that I have listed, and I have more buyers in the market right now. So I would say that everything is picking up. The number of closed sales was about the same as it was a year ago, but pending sales surged. Buyers are taking advantage of falling mortgage rates, but also increasing inventory. Supply in DC metro area has increased for 8 months in a row. The number of active listings at the end of September was up almost 19% over last year. Affordability, however, remains an issue, of course. There are just so many high prices in the area. People are finding it difficult to find a home. As rates decline further, we expect more buyers and sellers in the market. More sellers is a good thing. More buyers means it's going to be more competitive and harder to get a house, and that might start driving prices up even more than they've been going up. Let's take a look at some of the graphs here. This median sale price is important to note that, even though sales are down all year, like look at this, closed sales, right? We are down over where we were a couple of years ago, and yet our median sales price keeps at a higher rate. Now we do see a drop here, which is traditionally the case. As you can see at the end of the summer, we might see a little bit of a bump now as we enter into the pre-holiday season, and then we'll see a bit of a drop off again. Right, let's take a look at local markets. You'll see that closed sales are down in Alexandria City, Arlington County, Falls Church, Frederick County, Montgomery County, and Washington, D.C. They are up slightly in Prince George's, about 9%. Prince George's, 12% in Loudoun County, 11% in Fairfax County. And here's the clincher, up 133% in Fairfax City. However, note Fairfax City has only 28 listings. So this is an anomaly. It definitely skews the numbers. So I would say if we take that out, then our average here is probably going to be down rather than up. Median sale price. You can see in the region it's up 9%. Alexandria City, Arlington, Fairfax City, Fairfax County, Falls Church, Frederick County, Loudoun County, Montgomery County, Prince George's County all have an increase in the median sales price. DC has a slight decrease. And you'll note that closed sales in DC were down 15%. The median sales price was only down 3%. So there's still something that's supporting the bottom and holding prices up. At the same time, DC might appear to be a relative bargain compared to other places. You can buy more for your money in DC at $600,000 than you can in Alexandria or Arlington at nearly $700,000 or $800,000. Local markets, again, looking at pending sales, we can see here that they are a mixed bag all across the show. And new listings is a key number. The DC new listing number is down over last year. However, there are 300 more new listings than there were last month. So we've seen an increase in listings month to month, though a decrease year to year. And again, we've seen overall showings are up for the region. They're up 6.5 in DC, Prince George's, so forth. So what we're seeing is more people coming back into the market, which is a good sign. Months of supply. Now, here's where we need to know what's going on. A month of supply means how fast will the homes on the market currently sell based on the previous rate of sales if no new listings come on the market. So for the region, it's around 2 months of supply. For DC, it has finally crept over 5 months of supply for the first time since I've been in the business for 8 years. So DC is now approaching a balanced market. All these other areas have been for the last year and a half, 2 years, at or slightly below 1 month of supply. They are now beginning to knock up against 2 months of supply. So again, there is low inventory in terms of new listings coming on the market. However, sales have been down, and it has taken longer for the homes on the markets to sell. Therefore, active inventory has increased, and that's what's causing this increase in months of supply. As we start to see more buyers come into the market, as interest rates decrease or people become comfortable with where the rates are, then we'll see this shorten up. So the Virginia areas remain pretty hot. The suburbs in the Maryland areas remain fairly hot as well. And DC is the place where you do have more time. Now, that's overall. But even in DC, we can break that down. There are parts of DC that have detached homes, and those are selling very quickly. There are parts of DC that are mostly row homes. Those are selling not quite as fast as the detached homes, but certainly faster than condos. And then the condos are generally taking longer to sell. And they are the ones perhaps that are skewing these numbers. If we were to take condos out of the picture, it might be a different case. All right, my name is Taylor Johnson, and I'm here as a resource for you. I'm an agent with Keller Williams Capital Properties. If you liked this video and found it useful, please click the like button so it finds its way to other folks similar to you, and subscribe to my channel as well. Have a wonderful day. Thank you so much for your time. Appreciate you coming. Bye now.